Money is working for you while you sleep. Sounds like a dream, doesn't it? A unicorn, a leprechaun, a tree that grows currency. Well, it's not all that and a bag of chips, but it's close. Welcome to Dividend Investing. Dividend investing is a strategy that involves buying shares in companies that pay dividends. These dividends are usually a portion of the company's profits, given back to shareholders as a token of appreciation. It's like getting a slice of the pie for simply believing in the company. And don't forget to pound that like button, subscribe, and let us know in the comments if you have any suggestions for future content. It's much appreciated. Now, let's paint a vivid picture. Suppose you buy 100 shares in a company that pays annual dividends. Each year, you receive a certain amount of money per share. This is your dividend. It's like a thank you note from the company in cash. But what's the real charm here? It's the fact that these dividends can be reinvested to buy more shares, which in turn earn more dividends, or they can be paid out in the form of passive income. Dividend reinvestment is a cycle, a beautiful one indeed, that keeps your shares growing, even when you're not actively contributing. Let's look at a real-life scenario. You've invested in a company that pays a 4% annual dividend. You decide to reinvest these dividends. After a year, your investment has grown, not just by the 4% dividend, but also by the additional shares you've bought with that dividend. Now you have more shares earning dividends. And the cycle continues. Most companies pay them quarterly, giving you a dollar cost averaging superpower. Stick around till the very end, where we will reveal 3 companies that pay incredible dividends as a start to your dividend investment research. This is the power of dividend investing. It's a strategy that doesn't rely on market highs and lows. Instead, it focuses on steady, consistent growth over time. This strategy is not about quick wins. It's about long-term financial health and passively letting your money do the heavy lifting while you sit back and watch your investment grow. So, the magic of dividend investing lies in the power of compounding, your money making more money over and over. Now you might be thinking, how do I choose a company to invest in? Not a simple solution. One consideration is the dividend yield. Dividend yield, in simple terms, is the annual dividend payment a shareholder receives divided by the market price of the stock. It's a key metric that gives you a solid idea about the return on your investment. Imagine you're considering 2 companies, Company Alpha and Company Beta. Alpha has a dividend yield of 5% and Beta a yield of 3%. At first glance, you'd think Alpha is the better choice. But here's the twist. Dividend yield is a snapshot, a moment in time. It doesn't tell you about the company's financial health, its growth potential, or the sustainability of its dividends. So, while Company Alpha's higher yield might seem attractive, if their dividends are unsustainable, or if Company Beta is on a growth streak, the tables might turn. Remember, a higher dividend yield does not always mean a better investment. It's the whole package that counts. Just like any investment, dividend investing is not without its risks. Yes, there's no such thing as a free lunch in the financial world, and the same holds true for dividend investing. The first risk you might encounter is that dividends can be cut. Companies are not obligated to pay dividends, and in tough times, they might decide to hold on to their cash instead. This can lead to a sudden drop in your expected income. The second risk is the potential for a decrease in the company's stock value. If the company's performance dips, the stock price might follow suit. This could mean a loss if you decide to sell your shares. Another risk is market volatility. Stock prices fluctuate, and sometimes they can swing wildly due to economic events or changes in investor sentiment. But remember, with risk comes opportunity. It's all about balancing the two. So while dividend investing does carry some risks, it can also offer significant rewards if navigated wisely. So you're ready to dive into the world of dividend investing? But where do you start? Well, the first step is to build a dividend portfolio. This isn't just a fancy way of saying buy a bunch of different stocks. Diversification is about balancing your investments across various sectors and industries. This way, if one sector takes a hit, your entire portfolio isn't sunk. But diversification isn't just about spreading your investments around, it's also about understanding what you're investing in. You wouldn't go on a road trip without consulting a map, right? Similarly, You shouldn't invest in a company without understanding its financial health. This is where research comes in. Look at the company's earnings, its debt levels, and its dividend history. Is the company consistently profitable? Does it have a manageable level of debt? Has it consistently paid out dividends, and over how long? These are all crucial questions to ask before you invest your hard-earned money. And remember, dividends aren't just about the here and now. They're also about the future. So, look at the company's growth prospects. Does it have a plan for the future? Is it well positioned to take advantage of emerging trends? Building a dividend portfolio isn't just about picking stocks and waiting for the dividends to roll in. It's about understanding your investments, managing risks, and planning for the future. And lastly, be patient. Rome wasn't built in a day, and neither will your dividend portfolio. It's going to take time to research companies, to understand their financial health, and to build a diversified portfolio. Remember, investing in dividends is not a get-rich-quick scheme. It's a journey, not a sprint. So, take your time, do your research, and build a portfolio that will provide you with a steady stream of income for years to come. Investing in dividends is not a get-rich-quick scheme. It's a journey, not a sprint. So buckle up, enjoy the ride, and watch your investments grow. So there you have it, the basics of dividend investing. We've traveled through the power of this investment strategy, understanding the allure of the dividend yield and the risks that come with this type of investing. We've built a foundation, brick by brick, on how to construct a robust dividend portfolio, a fortress for your financial future. Remember, dividends are not just a mere percentage, they are a reflection of a company's profitability, and they can be a steady stream of income for you. But tread carefully, as higher yields can sometimes be a siren song, leading you to risky investments. While this journey may seem daunting, every step you take towards understanding dividend investing is a step towards financial independence. So why wait? And with no further ado, here are 3 dividend stocks in the S&P 500, Verizon 6.3%, Healthpeak Properties 6.6%, Altria Group 8.8%. Also consider mutual funds or ETFs that focus on dividend investing as its focus. And one more bit of powerful patron. If you already have mutual funds, you are already likely doing the dividend dance. Look at your prospectus for how your fund pays out its dividends and pat yourself on the back. As with all investments, past performance is not a guarantee of future results. So decide wisely. And remember, the journey of 1,000 miles begins with a single step. Start your dividend investing journey today and let your money work for you.